Today, we're going to dive into the data that is totally remaking one of the most important numbers in your entire life, your credit score.
It sounds a little out there, right? But that one question really gets to the heart of a huge shift happening in finance. We're starting to move way beyond just looking at your old loans and credit cards to paint a much bigger, fuller picture of who you are financially. So let's break down how this all works.
All right, so for decades now, this single three-digit number has pretty much ruled our financial lives. It's been the master key for everything, from getting a car loan to buying a house. But what actually goes into that score?
Okay, so the most common model out there, the FICO score, is basically built on 5 key things. But let's be real, the 2 heavyweights here are your payment history. That's a massive 35%, and how much you owe, which is another 30%. So put simply, do you pay your bills on time, and are you maxing out your credit cards? Everything else is kind of secondary. The big takeaway here is that this entire system is built on one thing and one thing only, your history with traditional debt.
And believe me, the stakes are incredibly high. Just look at this example for a $200,000 mortgage. Having a top-tier score versus a score that's still pretty decent but lower can mean a difference of $184 every single month. Over 30 years, that's more than $66,000 extra just flying out of your pocket. That's the real-world cost of this little 3-digit number.
So, if the whole system is built on a history of traditional debt, what happens to people who just don't have one? Well, that question opens up this massive gap in the system, and it creates what some people are calling a credit invisible class.
Get this, nearly 49 million adults in the U.S. are considered credit invisible. That means they either have zero credit history or one that's just too thin to get a traditional score. That is a huge chunk of the population that the current system just can't see.
And this really gets to the core of the problem. As the financial data platform Argyle points out, this system completely ignores some of the most consistent payments people make, things like rent and utilities. And because those things don't count, millions of people, especially folks with non-traditional jobs, are left at a serious disadvantage.
So who are we talking about here? Well, it's a really diverse group. It's young people just starting out. It's immigrants who are new to the country. It's the millions of us who are freelancers or gig workers. It's even women-owned businesses in developing countries. Basically, it's anyone who might be perfectly responsible with their money, but is totally invisible to the old-school credit models.
Okay, so that's the problem. How do we fix it? How do we make the invisible, visible? The answer, it turns out, lies in looking at a whole new kind of data.
It's called alternative data, and all that really means is financial information that isn't typically sent to the big 3 credit bureaus. It's a new way to figure out if someone is creditworthy by looking at all the financial habits the traditional scores just plain miss.
So what are we talking about here? Well, it's exactly the stuff we just mentioned. Things like consistent rent payments, your utility and phone bills, the actual cash flowing in and out of your bank account, and the income you're making from gig work. By looking at all this, lenders can get a much more accurate, up-to-the-minute picture of someone's real ability to pay their bills.
The whole goal here is to move beyond just this narrow, old snapshot of your past debt. Instead, alternative data can create a full 360-degree view of your entire financial life, and often, it's all accessible right from the phone in your hand.
But, and this is a big but, this data revolution isn't without its challenges. Like any powerful new tool, it comes with both incredible promise and some pretty significant para.
The promise is crystal clear and frankly powerful. We're talking about bringing millions of people from the financial sidelines into the mainstream, giving them a fair shot at credit and opening doors that have always been locked shut.
But the peril is just as real. Using these huge amounts of personal data creates all sorts of new risks. How do we protect people's privacy? How do we make absolutely sure the algorithms making these big decisions are fair and don't have some hidden bias? So let's break down these hurdles. For one, these new data sources aren't always as reliable. Then, there's the algorithms themselves. They can be these black boxes that are so complex it's nearly impossible to see if there's a mistake or a bias baked in. And of course, there are huge regulatory questions. Any new system has to follow existing consumer protection laws, like the Fair Credit Reporting Act, to make sure people are actually protected. Now, this isn't some theoretical debate about the future. This shift is already happening, right now, all around the world. And its impact goes way beyond just helping you get a loan.
Just look at Kenya's M-Pesa. It's a mobile money service that has completely transformed the country's economy. By using data from mobile payments,
lenders can offer tiny loans to millions of entrepreneurs who have no formal credit history at all. It's created this incredible wave of economic opportunity.
But here's something that is so crucial to understand. Your credit information, whether it's the old kind or the new kind, is being used for so much more than just lending. It's becoming the key that either unlocks or locks a whole bunch of doors in modern life.
I mean, think about it. When you apply for certain jobs, your potential employer might check your credit report. Insurance companies use a version of it to help decide what you pay for car insurance. Even the utility company might pull your history to see if you need to pay a security deposit. Your financial data is being used by gatekeepers all across your life.
Which brings us right to our final question. This new world of data can absolutely open doors for millions of people who've been shut out, no question about it. But it also asks us to share more about ourselves than we ever have before. So as we build this new system, we have to keep asking ourselves, what is the real price of that key, and who gets to decide?